Good morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 27th of October 2022. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, what do? We provide entries, exits, stops and alerts on over 160 ASX stocks. We run high conviction portfolios based on these entries and exits. Portfolio results have been running for 19 years and are available on the homepage. Remember, cool heads make cool decisions. Check out our About section in Stockradar to learn exactly how we work and how we control our trading. Okay, so let's get into the markets. First off, I'll give you a bit of an idea of what we're going to do today. We'll go through the background of the markets, overseas markets, the ASX 200. We'll look at some Stockradar portfolios, the ASX stocks, and in trading tactics, I'm going to talk today a little about win-loss ratio. We're tracking trends, that's what we do. What's the key to doing that sort of stuff? And win-loss ratio is a little bit of part of that, so we're going to talk a little bit more about that today. So the main thing about trading trends, what's the key, is running winners and cutting losers. Okay, that is the main key. We're always trying to do that. So we'll look a little bit about that in that win-loss ratio today. Okay, let's get to the markets to start off with. Dow Jones industrial average, it's been quite strong of late. We've seen a good rally for the last couple of weeks. We've seen some good volume on it. We're now getting up to an area where it's going to find some resistance, so the buyers are challenging the sellers now, which is a good sign. Okay, the Dow Jones is 30 stocks. Let's look at the Nasdaq. Nasdaq is much broader, but it's more technology. Okay, so it's not looking nearly as good, not nearly as much buying. Momentum is negative. It's not looking all that strong at all. A couple of bad reports, I think, from Google and with Amazon last night. Certainly putting a lid on that one at the moment. If we also have a look at a couple of the other indices, just a slightly broader market, the S&P 500 not looking that good as well. It's rallied a bit. We've had a bit of buy, but not nearly as convincing as the Dow. So it's that broader market. And if we go now to the Russell 2000, that is even broader again, 2,000 stocks. It's not looking that good as well. It's come back to a good area of support, but we really need some upside penetration before we're really going to get excited about a new uptrend appearing. So those indices, okay, the Dow's looking good, but that's only a 30 stock index. Okay. Commodities, copper, still trading in a range, not a lot happening there. There's a lot of activity there, a lot of opinions, but it's got to get through some resistance before it reverses the downtrend. Gold again, US dollar pressures keeping the lid on that one there, still weak. And if we go to Brent crude, it had a rally last night, quite good. It's trading between S1 and R1 at the moment, sort of $100 down to about $80. Some good support down here. We've seen some good buying in the rallies down here. Momentum is still weak, so we're getting a mixed picture. Again, I'm favouring the sideways movement for the moment as pressure comes from, there is certainly geopolitical pressure and Northern Hemisphere pressure on those prices at the moment. So, our energy stocks are still doing okay. And I'm going to look at one later on for you, which is struggling somewhat. Okay, so now we go to the ASX 200. And our market's not doing too badly in the scheme of things. We've had a good hold down here at 6474. It's rallied quite well. It's come back. It's on the upside. I think it's a little bit up today. It's got some more work to do. Plenty of work to do up here with this ellipsis for it to get through before we're really going to look for a challenge on the highs. But it's not come off quite as much, perhaps, as the overseas markets. And if we just go and look at the portfolio at the moment, it's showing it's flat this week at 21 of 183 covered. Of those 20 stocks of 162, so only 20 stocks, pretty narrow breadth, and one ETF, a bearish one of 21. The conservative portfolio, the broad section of the portfolio, is up 1 to 3 stocks, so we've only got 15% equities, 85% cash there. The Energizer 5 stock is full at 5 out of 5, 100% equities, and the Energizer 10 stock is up 1 to 9 stocks, so it's 90% equity. So those highly leveraged portfolios, leveraged towards stock picks, not leveraged towards money, but leveraged towards stock picks, are focusing. So we've got some good stock picks and some good stocks rallying, so keeping those indices firing along on all pistons. Okay, let's go to the stocks now. We looked at ICT the last few weeks. I know it's a little stable stock, we don't cover it, but it has done well. And the reason I'm showing you that, well, we did have a bit of selling this week. which is sort of, the price has come down a bit, but still holding pretty well at this stage. All it is a matter of lifting a stop on this one. We've got a good profit there, so hang on to that one. The reason I wanted to show you that one is because a fellow education stock, IDP Education, is also looking reasonably good at the moment. So we're getting a few green shoots showing, and I'll talk about that a little bit later on. But a trend reversal reverses a downtrend, which is what we're doing at the moment with IEL. And you can see I've mapped out the pattern in the dotted lines about what we look for. We look for a rally, we look for a higher pullback, which is done, and we then look for a rally to go through that high to create a trend reversal. Now it hasn't got there yet. 28.89 is the trigger point there, but the mapping out of this high-low, volume selling here pushed this price down, but it held very well, and it's now back up toward that high. I don't know what it's done today, but it's looking like a very interesting trend reversal, and the next resistance is back up at $39. Trend intensity rating is -1, so if it does break through that level, it will trigger a qualifying rating of 4 or greater, and that's all we need to signal a buy on that one there. So you can see the momentum here is now starting to move just above the zero level. So apart from volume, which is not that weak, hopefully we get a bit of expansion, but the weight of evidence of the trend intensity indicator is what we need, above the average price, reversing, and also momentum. So that's good. So IEL is an interesting one to look at. Another one I like in the resources sector is mineral resources. The reason I like this stock is I know it's expensive stock, but it is rallying well, strong. We've made a new high. A simple setup that we buy is a new high with a stop, and it works very well. It's a very reliable pattern. But what I like about this one, underlying this, is this big pattern here of support. High lows, high lows, high lows, high lows, pushing at this once, twice, thrice tested level. Which means these guys who have been selling here are probably going to get stopped out and have to reverse their positions by buying. That creates a market imbalance that generally pushes prices higher because you've got more buyers and sellers, and that's what happens to prices. So trend intensity rating is 10 for mineral resources, and it looks very good. Momentum's very strong, volume's okay, and it's above the average, so that's a good one. BHP, well, it's disappointing, but I've got to say, Fortescue, Rio, BHP are not looking that flash, and we'd love to buy them with all this, oil prices going high and iron ore still strong, really. But it's just not doing anything. It's been very disappointing. I mean, I can squeeze this volume up a bit if you like, and we can see there has been some buying support here, but it really hasn't pushed the prices up that much. We're still struggling below R1. We're on a downtrend. Momentum's weak. It's below the average. So trend intensity rating is -7. So for BHP at the moment, it's a no-no. It'll tell us when it's going high, but for the moment, the structure is not there for any of those stocks, Rio or Fortescue or BHP. Okay, now the one that's also been a little bit of an interesting one is Santos, which has struggled for quite some time. Now, we had a good report this week, and Woodside had a good report, but this price here, if we look at this price back here, it's March 21, it was just below $8, and here we are just below $8, 18 months later. So there's not a lot happening there. So really what I'm looking at is the big picture. I'm not going to get too embroiled in this up and down pattern. I mean, we've got some good support here, some high lows, which is encouraging, but the big picture is really what I'm looking at here. And if this area around $8, $9 falls, then we certainly have got a good potential for a good rally to occur from there. But for the moment, not. You can see down here, there's plenty of activity on volume, so there's plenty of opinions where this stock's going, but it just can't move in either direction at the moment, and thus momentum is flat. So Santos, trend intensity rating 0, momentum flat, and this price is sideways. So that is Santos for you. So it's that's what those stocks look like at the moment. That's all I've got for you today in the stocks. What I want to go to now is trading tactics. Just talking a little bit about the index because it has been quite strong. Really, the banks have been the main ones driving that at the moment. They're sort of sneaking higher slowly but surely. So keep an eye on those. And there's a couple of other stocks that are also doing quite well, which I'll mention in the newsletter later on this weekend. Okay, so trading tactics. Let's just go through to this one here again. Now, I'm going to show you two 5-stock portfolios. One started in August 20, one started in March 21, and just show you how the big winners are important. Win-loss ratio can be a little bit misleading sometimes. Cutting your losses is essential. So it's the big wins that count. Always keep your losses small, and we can do that if we are disciplined in our actions, okay? So portfolios are there to manage and monitor, not forget about stocks that are going against you, okay? That's important. Okay, so let's go and have a look at these portfolios. Okay, firstly I want to go to the one we started in August 2020. Okay, so we can see all the trades here. These are my current open positions at the moment, which we'll look at in a second. But I want to go back to the closed out positions and just see what you can see here on the win-loss ratio. So if I go back down to here, so you can see here we initially started very well with Aluka and Broad generating some huge profits. Then we've got quite a few losses. You know, there's a couple of wins here, big win here on James Hardy. Couple of wins, but generally we've got quite a few losses, which we keep primarily to less than 15%. Okay, 12, 3, 5. There's a blowout here down at 19%. Occasionally it happens a bit of slippage, but generally the losses are small and we keep the profits large as we can, or we run the ones that are running, and they are really important. So now we go to our open positions, and we can see what we've got here. We're running Woodside, Whitehaven, IGO, ResMed and Qantas. Okay, the big ones here are Whitehaven, which has done very well. It's come back a bit today. That's up a bit today. IGO is starting to perform reasonably well. Woodside's pottering along, and ResMed and Qantas are just starting to get on their case. So that's the profile of the portfolio. You can see there are quite a few losses. There are a couple of big wins in there. And if we now go to the dashboard and have a look at what we've got here, at the moment I've got 5 open positions. The closed trades are 22, total trades are 27. So of that, I've got winning trades of 12 and losing trades of 15. So my win-loss ratio is actually 44%. Okay, and that's not so good, you may think, but still what I am generating is a 36% return on the portfolio since August 2020. That includes dividend income, which is important. There's been some good dividends paid lately in some of these bigger stocks. But really, what I'm talking about here is the win-loss ratio. It does not matter too much. If you keep your losses small and run your profits, you will make money. So managing that portfolio is absolutely essential. So that's since August. So that's about 2 years, that portfolio. Okay, so let's look at the next one, which we started in March 2021. And you can see here we go. We're going to go across to look at the closed out positions across here, and you can see here there's a mix of positions, nothing substantial on the win side. At Mineral Resources at 22%, there's a 14 and a 10%, but there are a lot of losses there, 14%, 8, 12, 1, you know, very small, a couple of one blowout here at 18%. They can happen, very rarely, but they do, but most of the losses are small and a few profits there. Now again, if we go across to our open positions, currently the ones that we're holding, when we hold our runners as best we can, and we've got Computershare and also Whitehaven in this portfolio, and funnily enough we have Medibank in this portfolio, so I want to talk a little bit about that at the moment. Medibank Private has been a disaster. Okay, last week it was trend intensity rating of 8, it was running higher, and the portfolio, if we just have a quick look at Stockradar on the trading centre, we can see Medibank trading at 8 when we entered on the 18th of July at 340. The price last week finished at 351, and the stop was at 335. Today it is down at 287, and we can see the chart there. So Medibank Private is a stock that must be managed. So this week we will be exiting this stock because it's below its stop. Okay, it's deal with these things appropriately because they will happen. We can't envisage these sorts of things sometimes, and so they will happen in your portfolio. So you must deal with them properly. So we'll exit this stock on Friday, making room for another one. Hopefully, it'll be a good one. But the balancing act here is Computershare and Whitehaven, 2 excellent performers. Treasury Wine Estates is not doing too badly, and ResMed is in there. So if we look at the dashboard again on this one, we can see here currently 5 open positions, 14 closed trades and 19 total trades. We have 8 winning trades, 11 losing trades, and win-loss ratio is even worse here at 42%. However, we're still generating since March, so about 18 months, 26% on this one. We've got some good dividend income because we've got some good stocks in there. So this is really, again, the story is the win-loss ratio. As long as you manage those trades appropriately, cut your losses, run your winners, you will make money. Don't be despondent. When a stock like Medibank happens, just deal with it appropriately and move on. It's what you must do rather than worry about it, hang on to it, hope it's going to get better. It probably won't. Okay, so that's really a little bit about trades, your closed trades, your open trades, your win-loss ratio, your results, and the big wins are the key in these things here. So that's really what I want to talk to you a bit about today, about the 2 5-stock portfolios and how they performed. The message really is, What is the premise that underpins the strategy? There are 4 potential outcomes of a trade. I know you've seen it before, but this is important. Big wins. We must make them unlimited. Run them as hard as you can. Follow them up with your stop loss. Don't let those profits escape. Small wins, small losses cancel themselves out mostly. Big losses we just exclude. We don't take big losses because we know not only are they damage into your portfolio, but they're very hard to come back from. Okay, so whatever you do, however you perform, you must have a strategy which you engage. I have a strategy. There are lots of different strategies at work. The main message here is you must implement your strategy properly and don't second guess it, doubt it, worry about it, trade emotionally, things like that. So you must have a strategy. For our strategy, big wins are the key. So I know exactly why I'm going to buy, and then I will know what I'm going to sell. And when I have a stop loss in there, I know exactly when I'm going to sell as well. So why you buy and you'll know what to buy is very, very important. Okay, so that's really what I want to talk to you about today. Little trends like this one. All we've got to do is really manage these with our stop loss. Keep your stop loss rising so all this profit that goes in there doesn't disappear. Okay, so managing and monitoring your portfolio of stocks is vital to your success. Absolutely imperative. Buying and hoping and then doing nothing, especially when stocks start going against you, will cost you, and you'll probably kick yourself for making the same mistake time and time again. Trading is about learning, growing and getting better at it, not making those same emotional mistakes all the time. My strategy is totally unemotional. I just do what I'm told, and that's the way it is. Don't care what I think. Okay, so keep your losses small. You come to me for help and guidance, which I can do, which I will give you. The Trading Centre monitors and manages your trades, especially chopping out the losses before they get too big. And it puts you in control of what you're doing. So the comforting thing is about being in control, knowing that you're going to make sure those losses don't occur. And you're going to, when the big wins come, and who knew it was going to be Computershare? Who knew it was going to be coal stocks? You just don't know where they're going to come from. But all you do is manage them with your stop loss. Okay, so the actual doing part is in your control. So take control and you'll be surprised, how easy and successful you can be. It's a lot of common sense and a lot of discipline involved. Okay, stay safe, watch your trends, heed your stops, and give me a call if you need any help. I'm always up for a chat, and I'll see you all again next week. Thanks very much.